Bitcoin is on the edge of a cliff, but all hope for the bulls is not yet lost. In today's video, we're going to be doing a comprehensive macro and short-term analysis discussing exactly what is happening with the price action and the key invalidations for the current bull run cycle. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Bitcoin is currently retesting the range low of the current 2-month-long sideways consolidation range. A loss of this level could result in a violent correction for Bitcoin, but until then, support is support until it is not. And in today's video, we're going to be diving deep into both the short-term and the macro charts, discussing exactly what is happening with the price action, the upcoming monthly candle close, and of course the interest rate data. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us over on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us over on VIP. We do have a sale at the moment for 10 to 30% off memberships. You'll get access to, again, the exclusive VIP group where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our general chat, our trading chart and education chat, news, help, daily video, and trade setup chat. If you're interested in getting access, go ahead and contact me via the pinned comment, via the link comment, or of course you can click these links over here to find out more information. Let's go ahead, guys, and dive on in. So starting on the short term, guys, a quick summary. Bitcoin has seen a violent correction back down to retest both the range low of the 2-month-long consolidation range, as we can see retesting its key level of support, but most importantly, we have reached our deviation level and actually touched that sell side liquidity. This does indicate that this is going to be either the last short-term correction Bitcoin before we continue back to the range high, or the last level of support before a continuation lower. This is the moment. This is it. This is what everything is building up to. We are now officially at the decision point for Bitcoin, and with interest rate data just around the corner, that could be a trigger to propel Bitcoin in either direction. We'll be discussing that in today's video in detail. Starting off, however, on the market data. Moving over to this data over here, we can see 24-hour volume is up 39.55%, sitting at 177 billion. 24-hour liquidations at 374 million, up 166%, with 322 million in long liquidations and 56 million in short liquidations. And we can see, guys, that again, as we approach these liquidity levels, the sell side liquidity, as we approach that 60k region, there's a lot of stop losses set for long positions under this range. So we have now scooped up a large amount of that liquidity. In the last 24 hours, again, we did see a violent correction, and that is again rumored to be a result of the fact that the Hong Kong ETF inflow was not nearly as much as what is expected, or what was expected, and it was actually quite a disappointing number. I think it was around 9 million or something, don't quote me. I haven't actually had a look at it, but I think it was quite low overall. So again, the market didn't reciprocate that very nicely, and we did see a pullback as a consequence. Moving into the broader markets, the DXY has seen a little bit of move toward the upside. Again, if we want to see that continuation, we need to break above that 106 level. Not too concerned about what happens over here. I don't really care all that much of what happens, as we do have interest rate data coming up very soon. And we know interest rate data has a massive influence on the direction of the DXY. So whatever happens over here could violently change in either direction, depending on the result of the interest rate data. Moving over to the broader markets. Again, broader markets not looking fantastic over here, but support is support until it is not. We have seen a drop underneath the 5,100 level. But provided we remain above 5,000, we are still expecting macro continuations upwards. It is only if we lose a weekly under 5,000 could we expect a higher time frame downtrend to continue towards our 2021 highs. The same goes for the Dow Jones here. If only we lose a weekly under this level, would we expect an extended correction to our 2021 highs and our 50 EMA point. Moving back over to the broader markets, we can see that the interest rate data is coming out in 18 hours time, and this is going to play a massive consequence or massive impact in determining where the markets are likely to go next. And not just the interest rate data, but of course the Federal Reserve press conference that comes after the interest rate data, 30 minutes after the interest rate data. So the interest rate data itself is important as it sets, again, the actual risk in the market. If we do see interest rates pause, the risk in the market is unchanged. If we see interest rates drop, the risk of the market decreases. And if we see interest rates rise, the risk in the market increases. But as we know, the market itself is future seeing. It responds to future risk. So therefore, we are looking to see how the Federal Reserve discuss the potential for future interest rate changes to get an understanding of the changes in perceived systematic risk, which directly influences investors' decisions on the short term, which could push asset prices up or down. To give you an example, if the Federal Reserve come out and they say everything's fine, we're still moving towards a pivot, then markets will be okay. If we see the Federal Reserve come out and say, you know, everything's terrible, we might not even see a reduction in interest rates in 2024, that might happen now in 2025, that is still going to be okay because the notion is we're still moving towards the interest rate drop. But if they come out and say, you know what, we don't know when we're going to see interest rates drop, we don't think it's going to happen for any time for a while, that is going to be perceived as bearish in the markets, and we will see traditional assets markets drop, we will see Bitcoin drop, and we will see the DXY pump if that does happen. And again, that is what I'm looking out for, to see macro reversals and to see, again, the price action change direction. So let's go ahead now and jump over to Bitcoin. A quick word from BitUnix before we do. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump over to Bitcoin. So in 3 minutes time, guys, we've got the monthly candle close for Bitcoin, as you can see right over here. We're discussing in today's video what is happening on this chart, what it means for the macro 4-year cycle, how the monthly chart is looking. We're going to be going over the total to market cap. We're going to be discussing the total cryptocurrency market cap, over here. We're going to be taking a look at Bitcoin dominance, and we're going to be discussing exactly what is happening with the price action here, expectations, targets, and what you should be watching out for. So let's go ahead and start on the total cryptocurrency market cap. As we can see, guys, this is going to be our total cryptocurrency market cap. It is a reflection of the cryptocurrency market as a whole. And the total cryptocurrency market cap is now retesting yet again a very, very, very key level of support. And this is by all means one of the most important levels of support for the total cryptocurrency market cap. If we do take a look at the historic price action, we had a major level of resistance in this range, which we broke above. The breakout of this level sent us into a macro uptrend, okay? We've been in a macro uptrend ever since. The breakout of this level puts us into, again, that bull run territory for the broader markets, and we are now retesting this level. Therefore, a loss of this level will send us back into a macro downtrend. So we do not want to drop below this level, as this is, again, a yearly level of support. But more importantly, it is not only a yearly level of support, historically it has acted as the trigger for the start of the parabolic phase of the bull run. And therefore, if we do drop below this level, that would tell us that we have broken above, but we did not have the strength to sustain, resulting in a breakdown, resulting in deviation, which is a significant sign of weakness, which could result in the markets correcting quite aggressively, particularly the total market cap dropping quite aggressively. Again, this would be worst case scenario. Until then, support is support until it is not. If we want to go ahead and classify the market as bullish or bearish, above here we are bullish, below here we are bearish. So we definitely don't want to drop below here, and if we do, that could be quite catastrophic for the cryptocurrency market, so altcoins and Bitcoin alike. Moving over to Bitcoin dominance. Bitcoin dominance again has been traveling upwards to our level of resistance. We do have our circled area over here. This is our prior area of support. We can see we are now retesting this area yet again as a level of resistance. Provided Bitcoin dominance moves upwards, we will see again Bitcoin gain against altcoins, and this is going to be potentially bad because we do want to see an altcoin season start pretty soon, okay? And if Bitcoin dominance drops, we are going to see altcoins gain against Bitcoin, and we are more likely to move into an altcoin season. However, what happens with Bitcoin dominance is one piece of the puzzle. The total cryptocurrency market cap is the other piece of the puzzle. If we see the total increase, okay? If we see the total increase and Bitcoin dominance drop, that is when we will see an altcoin season. If we see the total increase, but Bitcoin dominance increases as well, we are going to see both altcoins and Bitcoin rise, but Bitcoin will outperform altcoins. If we see the total decrease, okay, and we see Bitcoin dominance decrease, that will tell us both the altcoin market cap and Bitcoin will decrease in value, but Bitcoin will decrease more in terms of percentage. If we see the total decrease and we see Bitcoin dominance increase, that will tell us again Bitcoin and altcoins will both decrease in value, but altcoins will decrease more. So again, there is one scenario out of those four that results in an altcoin season that requires Bitcoin dominance to drop and the total market cap to rise. Let's go ahead now and jump over to the monthly chart because we just had the monthly candle close literally like a minute ago, and then we'll jump into the short-term price action. So as we can see, the monthly candle has closed for Bitcoin. We actually closed at a price point of around 60,666. Wow. Literally 666. There are 666 over there. So it's not a very good sign if you're superstitious. Other than that, it's not too bad because we have actually retested now. And we've managed to hold above our key level of support, which is going to be that prior level, that 61 to 60,000 area of support on the macro chart. So again, we haven't had a horrible close over here. It wasn't an ideal close as we do have a bearish engulfing candle over here. This candle has engulfed our prior candle, which is again an indication of significant weakness developing within this monthly period. However, we are still at our structural levels of support over here. So we'll come back and discuss this in a lot more detail when we talk about our monthly charts. But let's go ahead now and move over to the short term. So on the short term, again, Bitcoin has now deviated back down into that range low deviation, having touched our sell side liquidity. Now, technically, while we are still within this range, support is support until it is not. I hate to be repeating myself over and over, but it is true. We are technically still at support. And sometimes inverting the chart can help. If you invert the chart over here, you can see we are clearly retesting this upper range of sell side liquidity, our deviation range at an area of major support. So we are definitely here retesting support. And as much as it does look weak, we do have to be considerate of the fact that until support is lost, the probabilities still remain in a continuation upwards. However, that does not necessarily mean we have strength. We definitely don't have strength right now in the short term. We are still seeing this downtrend, and we need to see a lot of ground reclaimed by the bulls before we have any degree of confidence that there is going to be a significant surge of strength that comes in. So let's talk about the bearish case scenario first, as is the most obvious and most simple. If we take a look at the bearish scenario, we can see on the right hand side we have our VRPV. Again, we have a massive VRPV gap from around 60-ish thousand down to 52,000. So we have a major area of support of 52,000. Our next area of support is going to be around 57,000. These are our two chunks of support, 57 and 52. So if we were to see, or if we wanted to see an extended correction to either of these levels, whether it be a 57k correction or a correction of 52k, we need to see our sell side liquidity lost. A drop below, okay, 4-hour candle close below the sell side liquidity would indicate that our area of support has been unable to sustain a support, and the sellers are stepping in with extreme aggression in comparison to any aggression we have seen within this entire 2-month-long support range. That is going to indicate to us that we are likely going to see a continuation to 57,000 or 52,000. Now, hypothetically, if we do see that breakdown, again, we are looking for reversals to develop at 57 or at 52,000. We'll come back in the macro chart today and discuss why both of these levels hold significance. Moving over now to the other other scenario, which is the bullish scenario, for the bulls to reclaim control of this price action, they need to do two things, and it's the same thing we discussed yesterday. We need to see a break of our RSI downtrend, and we need to see the price action break out of this 20 or so day diagonal downtrending resistance. If the RSI can break upwards and the price action can follow through, that is when the bulls have control, and we are expecting continuations to retest the range high of resistance. Now, we already know, guys, if we retest that range high resistance, we are expecting a breakout at that point. So at the moment, this pivot area, this apex point, is an area of massive indecision, and the bulls do not technically have control until we break over that downtrend and we break over this RSI trend line. But the probabilities are still in favor of a continuation upwards, as support is support until it is not. So again, guys, a very, very difficult area for Bitcoin. It is literally on the edge of a cliff over here. We have interest rate data coming up, which making it very susceptible to indecision, to volatility, to choppy price action. And this is in 18 hours. So we could see a lot of price movement in the next 18 hours. We could see a lot of liquidity grabs. We could see a lot of fake outs. We could see a lot of volatility. And it's always good to be prepared and be aware that trading these environments is not ideal. You should not be trading massive news events. But overall, guys, again, this correction has not actually changed anything. I really want to nail that in. Regardless of where Bitcoin is, anywhere within this structure, whether it be the range high or the range low, it doesn't change anything on a macro scale. It only changes how the charts appear to look. And how the charts are appearing to look is not always an indication of where the charts are going to go. Structurally, if we were here or here or here, it doesn't change much on the macro. It just changes on the short term. So we have now retraced to the range low of support, which tells us this is the last line of support, and we do need to bounce over here if we want to see continuations. Otherwise, if we do fail to bounce and we break down, we will see corrections of Bitcoin, and those corrections will potentially take us to 57 or 52,000. Let's head over to the macro charts now and discuss, if we see these corrections develop. Hypothetically, we see these corrections develop. What would they mean for Bitcoin in terms of the macro cycle, and how low could they go while remaining, or should I say, while the macro cycle remains intact? So we're going to look at it from a technical perspective first. We have our weekly chart over here. We're going to be taking a look at our our pi cycle indicator and our Ichimoku cloud. There is a triple point validation we have seen occur when we enter the parabolic phase, and there is a point validation we see when we enter a bear market. And that validation is going to be a breakdown of the low short and high short moving average / estimated moving average of the pi cycle indicator. So we take a look at the pi cycle indicator, we can see in history, moving back to, all the way back, let's go back to this cycle. This is like our first cycle, 2013, right? We saw the lower band of the pi cycle break into the Ichimoku cloud. At around the same point in time, we saw the price action sitting above both of the mid bands of the pi cycle indicator, okay? And again, we eventually broke out of the upper band. At the same time, it was retesting the prior all-time high. So we have the prior all-time high retest. At the point at which that is happening, the price action is compressing between the mid bands of the pi cycle and the upper bands of the pi cycle. And while that is happening, the lower band is breaking into the Ichimoku cloud. So that's 3 points, okay? We have those exact 3 points. Moving over to the next cycle, we can see at the same time, Bitcoin is coming up and retesting that all-time high area. We are seeing the price action break the lower band of the pi cycle break into the Ichimoku cloud. That's point number 1. We have point number 2 with the retest of the prior all-time high. And we have point number 3 with the price action consolidating above the mid bands of the pi cycle indicator. Point number 3, 3 points of confirmation. Moving into the next cycle, we can see the same thing. We have the lower band breaking into the Ichimoku cloud. We have the price action retesting the upper band around about the same time it retests that 2021 high. And we have the price action above the mid bands of the pi cycle indicators. We can see the price action remains above the mid bands until we break back below it, which sends us into a bear market, okay? We can see, again, historically, if we look at the price cycle, When we break above the mid-bands all the way over here, we remain above the mid-bands the whole time until we break back below it and enter a bear market. Moving back to the other cycle, exactly the same thing, guys, besides this deviation over here. We remain above it this entire time. We break back below it, we enter a bear market. It was a little bit more volatile back in 2012 and 13. Moving into the current cycle, we can see the same thing. We're seeing the same 3 points, not for the second time, not for the third time, but for the fourth time in a row. We're having the same technical validation. The lower band of the price cycle breaks into the Ichimoku cloud. At the same time, we're seeing price action retesting the 2021 all-time high as it retests the upper band of the price cycle. And while all that is happening, the price action is sitting above the midlines of the price cycle indicator. So everything right now from a technical perspective is not suggesting we are seeing a top. In fact, it is showing us we are seeing the same technical validations we saw in prior cycles before we saw continuations upwards. So it's very important to note that even if we see a correction down over here, that doesn't mean it's the end of the bull market. That doesn't mean it's the end of the macro bull market. That is just very, very bad for the short term for Bitcoin, but the macro bull market is still intact, provided, okay, we remain a weekly candle close above at least 55,000. If we drop below 55,000 the weekly, that is going to be a breakdown of the midlines of the price cycle. And that historically has marked the end of the bull market. So that is what we're looking out for the end of the bull market. If we look at it from a structural perspective, we are seeing some things this time around that we have not really seen too much in prior cycles. And that is going to be that we have had a monthly candle close above the prior 2021 high. And we've now had a monthly candle close back below it. So we haven't seen that monthly above and below in prior cycles. We have seen rejections. We have seen rejections, we have seen clean breakouts, we haven't seen breakouts and below. And again, this is not really too much of a concern because we've only had 2 data points, right? We've only had 2 data points, so we don't really have a common trend over here. As far as we know, this could be completely normal. We are looking at our technical levels as validation to tell us about higher time frame strength shifting. Thank you for watching, guys. Have a fantastic day. We'll catch you guys on Friday for our next video, so we'll see you then.